You may have heard the term escrow from your real estate agent and wondering what that means. It's important to know what happens when you're in the transaction as you're buying a home, and the escrow is a term that you'll want to know what it's about. My name is Kevin Brierton with Neo Home Loans. In this video, I'm going to talk to you about escrows and what it is and how it works. Escrow is a financial arrangement in your real estate transaction. Escrow is set up for a third party to hold and manage the payments for the funds required for the two parties involved in the real estate transaction. Having a third party involved provides a more secure transaction by keeping the payment in a secure escrow account, which is only released in terms of the agreement if the agreement's actually met upon. The escrow account is overseen by the escrow company. While the payment is in escrow, the transaction can only be safely carried out without the risk of losing money due to fraud. Escrows allow for a secure transaction and the confidence between a buyer and a seller. So how does escrow work? The escrow reduces the risk of fraud by acting as a trusted third party that collects and holds and only distributes funds when the buyers and sellers are satisfied. So here's when you'll be involved in the escrow account. Now, when you make an offer on a home, you will write what's called an earnest money check that will be placed in an escrow account with the title company. This is one of the first financial transactions you'll make when buying a house. What this means is that money is not going to the seller or the lender. Instead, the money is going to be held in an impartial third-party account until you and the seller negotiate the contract and close on the deal. You cannot touch the money, and the seller can't touch the money, and the money is held in escrow. This is important because it gives you peace of mind of having your money held in an escrow account, but really protects both parties. Escrow is important because let's say, for example, you put the earnest money in and went directly to the seller, and they had the money, and then for whatever reason, you and the seller don't reach final purchase or agreement to sell, and you certainly wouldn't want the money held by the seller as a negotiating tactic, and you would be at risk of losing it altogether. On the other hand, a seller certainly wouldn't want to sign over the deed of the house until you have completed the terms that you've agreed on. And of course, you wouldn't want to hand over cash for a home without knowing that the deed has been signed over to you. So having an escrow account ensures that everyone gets what they agreed upon at essentially the same time. The next time you hear escrow account is when you'll be working with your lender, mortgage lender. And as you near the end of getting your home loan, your mortgage lender will talk to you about an escrow or impound account or reserves. So it goes by a few different terms. These terms mean pretty much the same thing, so don't get them confused. What they are asking you is if you like to have your funds held by the lender to make your homeowner's insurance and tax payments. Mortgage lenders often will offer you the option to have them collect the monthly amounts along with your monthly payment, then pay the tax and insurance bills when they're due for you. Some lenders may require you have these payments placed into the impound or escrow account depending on your loan program. If you set up an escrow account or impound account with your lender, they include the amount of your insurance, your property insurance, and your property taxes with your monthly payment. They will hold that amount of money each month in the escrow account. When the time comes to pay these bills, the lender will pay them out of the escrow account that you've been accumulating the money in. It's a smart way to make sure that the money you're required to pay, that you've saved up throughout the year, and make sure it actually gets paid. The next time you'll hear about escrow account is when you're closing on your home. So when you're getting ready to sign your closing documents on your home, you're buying, you're probably going to hear from your lender or realtor talk about close of escrow. The closing of escrow is when the purchase is completed. A closing or escrow officer will oversee the closing documents and handle the exchange of funds and recording of the deeds. They will ensure that all the money is properly distributed and that the documents are signed and recorded and that all necessary conditions are met before the closing of escrow. If you have negotiated something in your contract that has not been completed or may impact what you're taking possession of the home, you may hear the terms escrow holdback. So what is escrow holdback? Ownership of the home is transferred, but funds are still held back in an escrow account. An example may be if you agree to let the seller's family stay in the home for an extra week until their new home may be ready. This means that they would sign a rent back agreement and requires the seller to pay a daily rate for the length of the time that they stay there. In this example, your real estate agent would be advise you to hold back a portion of the seller's proceeds until the date that they actually moved out of the house and left the house. So you want to make sure you hold back some of that money, and that will be held back in an escrow holdback account. Another example of an escrow holdback would be if you found something wrong with the home during the final walkthrough of the home. Maybe the seller agreed to make the repairs, but the work wouldn't be completed by the closing day. In this example, that money could be held in an escrow account to cover the cost of repairs. Once the escrow is closed, all the funds have been distributed, and you and the seller will receive a final closing settlement statement and other documents in the mail. You want to make sure that the statement review the statement carefully, really go through it, and then call the closing agent if you spot any errors. But be sure that your statement is in a safe spot with your other home loan documents. You'll probably need them once you file your income taxes next time. Knowing the terms and the steps in your real estate transaction is important. Be sure to get your questions answered, along with making sure that you're always working with a licensed professional. Thank you so much for watching. My name is Kevin Brierton with Neo Home Loans. I look forward to helping you realize your home loan dreams. To schedule a mortgage strategy call, please go to mortgagestrategycall.com. I would be honored to help you out and answer any questions. Have an awesome day.